In recent days, hedge funds boosted the wagers on higher commodity prices. This is partly from Goldman Sachs because the Goldman Sachs commodity index outlook has improved, which is highly weighted in the energy sector, very much in the crude oil sector. Um, it says the Federal Reserve and five other central banks made it easier and cheaper for banks to obtain dollars in emergencies in China. This is when they're all working in concert with each other in the last week. So what's going on is everything's kind of rallied a little bit. We saw this happen in the last week. Um, China lowered its bank reserve requirements for the first time since 2008. And also the U.S. jobless rate fell to a two-year low in November. So the copper rallied some and everything. Palladium, I noticed that's been going up quite a bit, and that's because the outlook the automakers is looking good. And again, the Goldman Sachs commodity gauge climbed 1.6% last month for the second consecutive gain. That is very much weighted in it's all the commodities, but it's very much in the energy markets, crude oil, gasoline, the Brent, and all kinds of things like that. Um, what is going to be a big thing on the commodities is if there's a serious slowdown in China, and it kind of does look that way. But there's going to be some curveballs coming into play, and I just want to look at what that is. Um, this was something, and I don't know if this is going to come about, but this was the BNP is the Paris National Bank, but they merged with Paribas. This is all French bank. It says it was Jacques Oliver Thoman, head of the Commodities Trade Finance at BNP Paribas and the president of Geneva's Commodities Industry Association, um, underscores a potential credit crunch that some fear could, um, accentuate the economic downturn by slowing down the trade in raw materials. In other words, there are some secretive or semi-secretive, like they call them public shy, Swiss-based traders that dominate the commodities markets. And if they can't get their hands up on enough dollars cheaply enough to do trading with, if there's a financial crisis, it'll exacerbate how the commodities prices will drop even more. And that's what happened in 2008. But I'm not sure that this is going to happen because it looks like they're making U.S. dollars available a lot easier. So I don't think this is going to happen. Um, it's saying, though, that it in its outlook for 2012 published on Monday, Deutsche Bank listed a liquidity crunch in the commodities trade finance as one of the top 10 risks to global financial markets next year. And global trade finance lending so far this year has reached 134 billion, down 15.5% from the same period last year, according to provisional data from Dealogic. So, maybe that has to do with why commodity prices are somewhat suppressed right now, because I'd expected some of the things to be a lot higher. But there's a couple of factors weighting in down on the commodities, and this is one of them besides the Chinese slowdown. But on the other side, we see that the central banks are all going to work together and keep that euro up. So I don't think it's going to crash right away despite all these predictions. Because what's going to happen if there's no euro? I think the central banks are going to lose out. The banks are all going to lose out. What's going to happen to all the loans they made in euros? That's why I think they're going to keep doing various types of QE, so that's going to be very bullish for the commodities. Most of the large trading houses say they don't have a problem, said the head of the commodities trade finance at one European bank. But around the corner, if the U.S. dollar situation does not improve, they will have a problem to refinance. I don't think that's going to happen. I don't think that's going to happen. This I found to be an interesting curveball. The European Union is thinking twice about the Iranian oil ban, and that is because some of the countries that are in the deepest trouble in the European zone, such as Greece, import a lot of Iranian oil. So when they're trying to say, one of the traders' jokes is maybe the aim of sanctions is to help Italy, Spain, and Greece to collapse and make the EU a smaller club. And that's, in effect, what they're doing. So they're playing a very delicate game. And, in the case of Iran, they're the fifth largest exporter of oil in the world. So if they stop them from try to stop them from getting revenue from their oil exports, it's going to create a shortage because Saudi really doesn't have the reserve capacity to make up for it. Plus, they are eyeing the market in India because sanctions have stopped India from making payments to Iran or slowing payments to Iran, made it much more difficult for them to be paid. So Saudi is looking to get the business from India. But if they got to make up for other oil, what's going to happen? So what will happen is Iran will still be able to export oil because they'll just sell it to China, and China will probably get it cheaper. That's all that's going to do. I don't think it's going to have any real effect. It says Iran's the fifth largest oil exporter and says it cannot rule out a self-imposed oil embargo to punish the West. And on Sunday warned that oil prices could spike to $250 a barrel as a result of sanctions. Now, that would cause an economic collapse. And I'm looking at this whole situation here, and they got to look at this all because what's it going to mean for like gold and silver and other things like oil, palladium, or whatever. It means that I almost think with this, looking at the sanctions in the past, they're not coming on till like quite some time. They're not going to be actually implemented till later on in 2012, like in April or something like that, second quarter of April. So if looking at how Israel is seeing this situation, I say they're going to attack Iran. I think they got their back up to the wall because, I'm not saying that I want a war or something, but I'm just saying if they got a certain window of opportunity to attack them, and it's going to disappear in so many months because they're going to harden the targets better or they're going to spread out their program better, they're probably going to do it. So, and I'm looking at, and I know in the case of Iraq, Saddam Hussein, he was able to withstand sanctions for years. In the case of Iran, they're going to be able to withstand sanctions even longer. So all this is going to do is actually hurt the European Union, and it's going to be good for China because they're going to probably get oil cheaper from Iran. So, just knowing how slick and smart the Israelis are, I think they're going to attack Iran. I don't know if that's going to be a smart thing, but I think they realize the situation and they really don't have to do it, so I think they're going to do it. Now that means buy your gold and silver, because in times of crisis, the real things that really are worth holding is usually oil and gold, and they actually kind of run together. And when oil is running in a bull market and gold is running in a bull market together, silver starts taking off like crazy. So I can't really ascertain when this is going to come about, but I don't think Israel is going to wait too long. I mean, they can even attack them this year for all I know. It doesn't seem like they will, but I can't see them waiting for the sanctions to take effect. And I can also say that the sanctions aren't going to work. So I think that's, knowing what's going to happen with Iran and Israel is probably more important than anything else that's going on in the world with the central banks or anything else, as far as the traders having enough dollars to trade with or whatever. Talking about Saudi Arabia is the only nation, oil nation, with spare capacity. They want to ship, they're saying they could ship more oil to Europe to make up for Iran's production, but they also want to, they don't want to lose that Asian market with India. that's where Iran was shipping to, but India was having problems paying them. They're not going to really be able to cut off Iran. That's what I say. So I'm not exactly sure when this attack is going to come, but I almost kind of smell from the way all these political events have been coming up lately that, you know, the thing with Pakistan, the Russian statements and everything, I think they're just playing the smaller people for suckers, and they're probably going to start a war. Probably that's what I'm thinking. But money-wise, I do expect this oil to take off like crazy. Now I dump half my oil because a little more than half my oil because I think before this takes off, this might be another pullback, and I'll just get it cheaper. But considering how low silver is right now, maybe I'll just go into more silver or something like that, or maybe even palladium. But for now, I think that the most important thing to consider with gold and silver right now is what's going to happen with Iran. And it looks like the sanctions aren't going to work, and China's probably just going to get oil cheaper from Iran, and Iran's not going to send oil over to, you know, maybe they'll cut them off in Europe, but then Saudi's not going to be able to make up for all that production loss. So that's probably going to drive up the price of oil. And if you want to be in one area when there's a lot of tension, it's usually gold. That's going to be very bullish for gold. So, you know, I don't know what's going to happen like in this next week. I'm thinking that a lot of these metals are probably still going to be floating up. I think they're going to probably not go downhill. I think they're going to still continue to go upwards because there's a lot of things that are coming on into play pretty soon, like the QE3 coming in the first quarter 2012. And if there's some good words coming out of this meetings coming up on December 8th and December 9th regarding the EU, it'll be very bullish for gold, and that should help silver too. So I don't think we're going to hit 40 this year. I'd like it to, but it's probably right around the corner. And but the most important thing to consider right now is what's going to happen with Iran. And I think Israel is going to strike them because they're not going to. And that's the most important thing you got to really consider about gold, because especially, I mean, I know it's linked to its silver, but right now, if there's a strike on Iran and there's nervousness in the financial markets, a lot of people are going to go into gold at this time, and I'm sure crude oil, and you'll see the silver follow right after that. So I'm thinking that's going to come up pretty soon. Bad news or not, but I think it's going to come up because Israel has this window of opportunity when they can do things, and they're saying it's not even so much that Iran will have a nuclear weapon, it's the fact that they won't be able, it's so deep in the ground, they'll be so spread out that they won't be able to even knock out the nuclear program. And I absolutely know in my mind these sanctions aren't going to work. Iran has got too much oil, and people need oil too much. So somebody's going to buy it. They're not going to lose out money. So the sanctions ain't going to work. And I think Israel's smart enough to realize that. Now, as far as them being smart and attacking Iran, I don't know if that's smart, but I think they're going to do it. So assume gold and silver is going to go up, and oil is definitely going to go up.